It's a Wednesday morning. Welcome back to Market Watch. Thailand just opening about 15 minutes ago, and here's a snapshot of where we stand at the moment. The market checking in right now, 745.9, off by just over half a percentage point. For more on this market, let's get out to our newsroom and check in with Mark Lowdy. Hi, Mark.
Thanks very much, Lisa. Well, as you saw, the market is also slightly weaker this morning. It's one of the last in this part of the region, at least, to open. So investors there already have the benefit of watching what happens in the other markets before they start trade. And unlike some of the North Asian markets, Thailand doesn't have that big a tech exposure, with the exception of Hana Microelectronics and Delta, among others. But generally speaking, the market is taking things fairly calmly. In fact, arguably there are more important things on the agenda for the Thai market, including oil stocks in light of the big increase in prices. One of the largest, in fact, the largest company on the Thai bourse is PTT. It makes up about 10 or 11% or so of the market capitalization of the SET, and it is in fact flat at 246 baht. And Thai oil is another one to follow as a result of the oil prices. It is also flat, 2 million shares having gone through. Thai oil is also up substantially since the beginning of the year, already 7% or so, and since its IPO is in fact up by 55%, that debut coming late in 2004. So overall, the Thai market is still holding up fairly well, and today's decline is really more a blip than anything else. Let me quickly run through some of the other important sectors. Property stocks, land and house and Leyland properties are down by 2% and 3% respectively. Among construction stocks, we're also seeing some decliners. Italian Thai developments down by 2.2%. And telecoms firms are weaker as well, with 1% or so declines on the big four. The second important factor for the Thai market is the Bank of Thailand's decision on interest rates. To a large extent, the 25 basis point hike the market is expecting has already been priced in, that decision to come in less than 4 hours. Andrew Stotz is Thailand Head of Research at Citigroup Investment Research, and he joins us now live from Hong Kong. Thanks so much for making the time, Andrew. Tell us about the last time you were in Thailand and what you saw on the ground. How is sentiment shaping up among business people there, and how do they feel about the prospect of another rate hike?
I think it's probably already in most people's expectations is that we have another 50 to 75 basis points this year. It's an inevitability because the Bank of Thailand is really being measured against its inflation targeting. So I think most people are expecting it at this point.
Doesn't mean that necessarily, though, that they're happy about it, right? I mean, how unhappy would you say they are? I mean, companies generally don't like to see interest rate hikes, right?
Well, the very, very different thing about Thailand compared to almost anywhere else around the world is this excess liquidity that we have. And what that excess liquidity in the system means is that even though the Bank of Thailand has raised rates over and over and over, that really hasn't translated into a higher cost of funds for the companies because the banks haven't moved their lending rates by much at all. So what I think most corporates are nervous about is that we get somewhat of a whipsaw effect over the next, let's say, 6 to 12 months, where the lending rates going out to corporates from banks starts to really rise significantly, and that's the main risk factor.
Hi, Andrew. It's Lisa along with Mark. We've also seen the government expanding its price controls on items that are considered essential, things like concrete, white noodles. Is that helping?
Well, I mean, they've had price controls for many years, and it's something very common for them, and I think that's their one way of trying to hold on to price and inflation running away. And I think, the other thing we've got is just simply the Bank of Thailand has only one real tool, which is raising the interest rate. But the point is that this is cost-push inflation. And so it's not like we have a lot of demand that's really pulling up prices. What it is we've had energy prices rising so much that it's caused this cost push. So in some ways, the interest rate tool is probably not the best tool for dealing with this.
Andrew, do you think political instability is going to be a problem for the Thai economy? I was interviewing a guest from HSBC yesterday, and he really laid it out there and said they're just flat out advising their clients to avoid this market because of the possibility of a meltdown for Thaksin Shinawatra.
Well, I'm going to go out on a limb a bit on this, and it may be a bit surprising, but I would say I expect no change in government. And one of the reasons why is because of this new constitution in 1997 that was set up. The main objective of the drafting committee, which had no relationship to Thaksin at all at that time, the main objective was stability, and they have it. And it is very difficult to take down this government. That doesn't mean that people won't be unhappy with the government, that there's a lot of frustration, but my feeling is that we're not going to see a turnover in the government.
Very interesting. Andrew, we'll ring you up if something contrary happens. In the meantime, as head of research, obviously you're concerned with how the companies that you study as part of your daily discourse, how they perform, how open they are with you in terms of information. And before I ask my question, I'd just like to go back to a soundbite from our guest earlier this morning from the International Finance Corporation, who was reflecting on the level of corporate governance in Thailand. Here's what he had to say.
If they want to continue to be a player in the global marketplace, that they have to step up on corporate governance and issues of openness and transparency. So there's lots to be done. It's a good place to do business in. There's a good labor force, and the domestic market is good. But in the long term, I think sustainability depends on that you have good standards of disclosure, transparency, and governance.
Even if the Thai government is a very stable, Andrew, I mean, you'd have to admit that there is a certain sense of fear among chief executives who now tread far more carefully for saying anything wrong, not for corporate governance reasons, but for fear of upsetting the government. How has this impacted your daily work?
Well, I mean, there's two issues that you're talking about. One is about corporate governance, and one is about fear of retribution. If we talk about corporate governance, I would say there's been a tremendous amount of progress in the actual structure of what companies are saying in their reports to shareholders, and the structure of the way that the audit committees and all of that is set up. And the SEC has actually made a tremendous amount of progress in that area. If you talk about the side of kind of retribution or what are the risks, I think any time that we've got a lot of power in the current government, anytime you have a lot of power in the current government, people are going to be a bit nervous, and there is some of that. So I couldn't deny that.
Okay, Andrew, thank you so much for joining us today. Great to have you on the show. That was Andrew Stokes, Thailand head of research at Citigroup Investment, joining us from Hong Kong. When Market Watch resumes, shares of UUN